Hello and welcome to Not So Quick Take TA here on Landy's Crypto Corner. Today is June 18th, 2024, and settle in. This is going to be a little bit of a longer video. We are going to start with Bitcoin here on the daily. We're going to take a look at a few things regarding some of what's happening in and around this very important support area from the April of 2021 monthly swing high here at $65,000. And note that Bitcoin did come down to the next close open area of support that we were looking for at $64,000. So that did occur in yesterday's price action. Now, granted, today is still Tuesday for me. We do have the Wednesday candle open. And if we do see Bitcoin start to trade back down below around $65,000, to be fair, this April of 2021 monthly swing high is coming in just below 65 at 64,900. So if we do see that area break down yet again, I would keep an eye on that lower second to yesterday's wick low at around $64,000. Anywhere below there, and I would start to target the close opens here that were acting as resistance prior to Bitcoin putting in this higher low back on the 15th of May. So that is coming in at around 63,000 to around 63.5 or so, a little bit shy of there. Now, if that area were to break down, I'm looking for maybe a pit stop somewhere around the order block candles over here at $62,000, and then down to the October of 2021 monthly closing high from the prior market cycle. And this closing high was coming in at around, or is coming in at around 61,350. I'd give it room between $61,000 and $62,000, anywhere below there, and eyes on this higher low, as Bitcoin will likely run that area in and around the close open at 60,800, which 61K would qualify as a run of that area, I do believe. But keep an eye on that wick low. If that low is lost, that's that was the beginning higher low of the prior uptrend at around 60,000 to 60,150. If that area is lost, we're looking for Bitcoin to head right back down to the March monthly quarterly zone. And this is coming in at $58,800 to $59,000, depending on the chart that you are using. This is Coinbase Spot. That area is very important because it is a monthly and quarterly closing high. Anywhere below there, and I would be targeting at minimum on the daily down to swing this lower low of this entire range that Bitcoin is in. That is currently coming in at around that 58,200 to 300. I would give it some room there. If that area does break down, of course, I'm looking for a run of that 56,500 into the mid 50s to begin with, and then we scroll over here to something that I already touched on yesterday and many times. I would be looking for a run on any closures below the mid 50s. I'd be looking for around $53,000. This was prior resistance back here in February. The historical area is the September of 2021 weekly swing high. And then we have the, I think I misspoke about these closing weekly highs from 2021 from August and December of 2021. These were closes. So Bitcoin back in February did find this area as resistance and then again as support. Nice price action there before going on to make the new all-time high. This, is starting to get, at least in the sentiment side of things in the market, I'm starting to see a lot of fear. And this is still in the strong half of its range right now. So, that in and of itself is not a signal by any means or any stretch of the imagination. Bitcoin still is showing that it has some downside left in it, particularly on any closes below the lower first. We're going to see Bitcoin continue to get expansion of the Bollinger Bands. If it starts to break down from horizontal supports, then it's at minimum going to ride that lower second down, which it has been doing since getting just one tiny little closure back here on Friday of last week. Nice bounce up to that lower first, and then it's just kind of grinding that lower second down into these further downside supports. Where it starts to get a little bit more aggressive in terms of its downside look is if we start seeing any closures below the lower second that lose the prior day's wick low. In this case, this being $64,000, right? That's horizontal support and resistance as well. Then we're looking for expansion down into the top side of that higher low structure. And then the bottom side, that's really what we're looking for at that point. as the next available targets in terms of volatility, and then from there step it down to some of the major areas. Now, this is not anything that was unexpected, right? When we look at the local support and resistance chart that I have shown quite often over the past couple of weeks, since Bitcoin, even when we were at the highs here, we started to identify this this double top, and then the criteria for it to actually put in that high and break down. Where do we want to see it hold, that kind of stuff? Well, it's pretty easy to identify the areas of interest here. I will still keep this green and red box up there, but really that's a big zone between 67,272 there and around 71,622. And I did add an extra few boxes here to help those understand kind of where price is likely to head. Now, when looking left, we have this big zone, and I said basically, what's holding price up right now is 67, 2 to 300 depending on your exchange. That is the first major lower high that preceded, or did not precede, but came in after the nice uptrend here. We had the lower low and then lower high structure here. This was holding price up. And once that area breaks down, what are we looking for next? And that was the roughly around the 65, 500 to the next close open lower high. So we had a higher high on a wick and a close, and then that preceded the lower low in this case. And then we had the lower high. This was the first major lower high, since this guy back here in late March, right around the all-time high. It still actually had a chance because higher lows were being put in and higher highs. But once this lower low came in, then it was okay. We're going into a sideways consolidation at minimum with some short-term downside price action. We did get that, and it was actually a little bit more than short-term. Lasted from, early April all the way through to early May. So, that was about a month of sideways and down with these lower highs, and now we are testing these highs one by one. And once breaking down from that 67,272, where did it go? It came right down to test the actual next lower high that preceded the higher low structure. And, you can refine this down with the closes here, but one of the reasons why I had this as a bigger zone is because you can see all of the different candles that were coming in here, how this area acted as a bit of a inverted head and shoulders as well, which is why I marked the close and not just the wicks there. So on the way back down, anywhere below here, I have now marked off, any closes below $64,000. Where are we looking? The close open structure on the higher low that preceded or was kind of the area that we needed to see break out and closed above to set that as a higher low. And that would be our 63.5 down to around $63,000 here. Anywhere below there, some short-term price action around this this low side structure here at $62,000. From there, basically looking right down to the close open structure, 60,800 to 61K. And then eyes on that lower low wick there at 60,500, anywhere below there. And we're looking to the big downside wick. This is very important because this is kind of where we were looking for the range to kind of define itself prior to the lower low structure. And this was at that 59,224 to that close open there at 60,800 or so. And then we have the lower low deviation on the daily. Now, I do want to mention that this is a lower low deviation on the daily, and that's going to lead us into some higher term time frame talk here. And, we see the daily close below that big monthly quarterly level. And I had mentioned, for those of you that were following me at the time, I do have quite a few new followers now, but I had mentioned, I do need to see more than just a daily close. And we did get the move down to roughly where we were looking anyway in that case, but to the 56, $55 to $56,000 area, 56,500 at the front run is perfectly fine. We were calling this out at the time. And one of the big things that you do need to understand is this was a closure on the daily 2-day, but as you start going up the time frames, on the higher term timeframes, I was really looking for some of the higher term timeframes. If that broke down, then it's a danger signal. Same for right now as well. And the 4-day, 3-day and above did not close below there. Obviously, the 5-day didn't, weekly didn't, if none of these other higher term timeframes are closing under there, which we did not get any weeklies, of course, and we didn't get a monthly under there. So this was a daily 2-day deviation in this case. And that is fine. Deviating from an overall macro support resistance area on a daily is not a big deal. One of the things that I do want to point out as we go through these higher term timeframes and kind of dive into this daily a little bit more is, the daily is getting critical in terms of its momentum to the downside. It is just about mid-range for its overall trading range that it's been in for quite some time now. And that time period is, since it broke into the prior monthly closing all-time high closes and the wicks. So we've got the closes as the orange box here with the orange horizontals, and then the wicks from last cycle as the green areas up here for the wicks. Now this, has been going on for quite some time. Can it go on for longer? Absolutely. So we've got, since breaking into this area, we're now on, 112 days. So, we're a little over 3 months, a little over a quarter, right? We are moving into the end of the quarter, and we did see this, only just begin to break into this area in February. So this really is not unexpected. Running into the halving, making a new higher high just prior to halving was something that we were looking for as well. That is a little bit out of character for what Bitcoin has previously done. But the sideways price action for a couple months post halving as well, and maybe even some sideways that lasts a little bit longer, is not necessarily that crazy. We're not going to dive into that, but what we do want to start looking at is where are we in terms of potential bullish divergences right now. You can see that this is that 60,800 close with the 60,150 wick here on spot price action. That is this level in RSI that did break down. Bitcoin is headed towards the edge of the bearish control zone, and I believe even tagged it already. Yes, so enters bearish control zone 64,700. So it tagged into the bearish control zone already on that tap of $64,000 in yesterday's wick low price action. And this does set up, at minimum, a bounce divergence in play. As long as Bitcoin is closing daily candles above, let's try that again. As long as Bitcoin is closing daily candles above this higher low of the prior uptrend, or the first higher low of the prior uptrend, it can throw what's known as a continuation drive of bullish divergence or hidden bullish divergence. So we have lower lows on our RSI and higher lows on price action. That would indicate a hidden bull div once a low is set. Well, how would Bitcoin set a low right now? In order to set or print a low, at minimum, Bitcoin needs to close back above 66,575. Or anywhere above that lower first, you're going to see the swing low get set. And then right now, I would need to see, let's see, what is the close open here? It's actually 66,630, so it's actually a little bit higher there. That is going to be the criteria. So back above, 66 and a half, eyes up. The low is probably set, the swing low on the daily, and we need to see follow through with a closing low being set. That would validate that that actual drive of bullish divergence, and closing anywhere above the lower first standard deviation of the Bollinger Bands right now at 66,215 would give us the targets of the local highs here of around 67,274, which is, of course, this high over here around that 67,272. So around 67,300 above there, above those wick highs where we did get those nice two spikes. And you see that Bitcoin is really running these areas with equal highs a lot, and these important resistances with equal highs a lot. If I can get above there, then we're targeting somewhere around the basis band, which is just below $68,000. but I would give it a range between 68,000 and the prior cycle high at $69,000. Above there, looking somewhere around 69,800 to 70K again, and then right back to the close open highs here that did fail to push any higher at that 71.5 to the wick highs at $72,000. Again, anywhere above there, I'm looking for the all-time high and higher. 73,835 at the all-time high to around 75,000, 75,000, 78 to 80 in the mid to low 80s. We're going to take a look at some of the criteria as we go through some of the higher term timeframes for Bitcoin. For what I'm looking for in terms of the Bollinger Band setup and how that kind of weaves in with some of those upside targets and even some of these potential downside targets. We can see lower third standard deviation is currently at that 62,750 or so. It's actually 62,660 right here. Really getting those as many sixes as they possibly can in these bands here. But in this case, any kind of closures below the lower second are going to push that down. Usually you see price not necessarily rocketing through that lower third. But one of the things that I would be aware of is this was a decent size compression at the highs here. So any kind of closes below $63,000, again, we're looking at that 62 to 61 at the October monthly. So it is starting to show that potential on that downside, but Bitcoin's still hanging on to that $65,000 support on a close. That is something that the bulls want to see and is not that crazy bearish just yet. Now, this is also going to be the daily momentum pivot. 65, 100 or so, give or take $100, is going to be the area that you want to see hold up on a daily close. That would at minimum get an initial cross back to the upside for regular Stoke here. This is not a Stoke RSI, mind you. This is measuring close over close price action momentum, not the velocity of RSI like we have up here. I do want to point out that, this was and is still painting as a bit of a mean reversion play. We saw that we had the expansive phase kind of kick off up here and then down into the lower second standard deviations right around support. So we saw that the compression to expansion, but it didn't and hasn't gotten really aggressive just yet. If we see an additional closure above $65,000 or a recovery above that 66.2 to 300 to set a daily low, I would look for the actual BBWP, which is the volatility metric that we're using, to continue to dive below this moving average. And the next thing that I would be looking for a potential bounce in Bitcoin is for that moving average to tick down. So basically, Wednesday is going to be an important day for Bitcoin to not push its continuation further to the downside. We could eventually see maybe the Wednesday, Thursday reversal narrative will be back. We will see, especially because Friday is the quadruple witching, where we have a bunch of confluent options closing just before the quarterly here, coming into the end of the month. So third week of the month is the quad witching. So we're not really going to get into that. That's not what this channel focuses on, but we are going to take a look at the 2-day, and you can see that the 2-day is back in compression. So I'm not necessarily looking for too much further downside just yet, unless we see expansion below the lower second standard deviation on the 2-day, for instance, which would be closes below that $64,000 level that lose the lower second. So anywhere closing on the 2-day below 63, 600 to 700 or so would start to look as though Bitcoin would want to expand down into that lower support there, $61,000 to $62,000, maybe lower, deeper into that October and March monthly and quarterly down there. So right now it did close open below the lower first. We do see the uptick in volatility, but we see the compression in the bands. This kind of an expansive look. So we had the big expansion and then the big mean reversion and then a bounce up to the upper bands. A run of those lower bands is not out of the question before, trying to move back up in the context of holding supports in a bull market. Now, That also means that Bitcoin can come down and, tag the lower second standard deviation on the 2-day here, which is just below that $63,000, which would be the equivalent of running yesterday's low and lower. But if it starts to close below there on the 2-day time frame specifically and doesn't bounce back above it, then we're looking for a sustained move from the volatility aspect down to that lower third, kind of a price replace band into that overall support at the downside. The other thing to look for is to the upside. If we see the daily in the context of the 2-day start to regain the 2 days lower first, coming in at around 65, 600 to 700, then we can start looking somewhere around this spike high again. That's coming in at that 67, 274, 272 area, this lower high wick over here, swing. Up to the basis again, and that's coming in at around 67.7 or so on the 2-day. That would be a recovery, especially on any closures in and around the basis. That would be a recovery of this higher low structure. And then we'd be looking right back to $69,000 to $70,000 by the upper first, and then right back to the upper second by that $71,500 to $72,000 by the double top over here on the daily and 2-day and longer term timeframes. And anywhere above the upper second, we're looking for expansion to the all-time high and higher, and for the next leg to at least start to kick off. But one of the things that you do have to understand about volatility, expansion to contraction is typically when we are just kind of seeing price get that expansion down, bounces back to the upper second, upper third area and close in between the bands here, and then come back for that mean reversion around supports. Typically, in the context of compression, price is probably not going to do too much more unless you start seeing closures below that lower second or above that upper second. So as it stands right now, for this next 2-day period, which just opened, by the way, I'm not looking for too much more. I don't want to be greedy. Wicks are fine. It's closures that matter for the bands here in terms of volatility metrics. So not too much going on. Let's go ahead and look at the momentum pivot. So the momentum pivot is still very aggressive, but you can see the next 2-day is going to really dive down towards that oversold zone. It's currently at 70,150. And, just to kind of relate where that is on the daily, the daily is basically right where price is trading, around $65,000. And the 2 days got a ways to go in terms of a momentum reset, but a lot can happen in between now and the next 2-day closure, which this is going to as this is a Wednesday candle, it's going to close with the quad witching day on Friday. So it is going to be interesting to watch as we come into the big options expirations. And I did want to point this out again. We've covered this before in some of the longer form videos, but the 3-day is a big range above the upper second. Then we're looking for all-time high and higher to where around 73,835 to the upper third, currently at around 76. I wouldn't be looking for price to necessarily, if it did start to push that upper second or get a close above there, I'd be looking around 75 to 78 on any closes above the all-time high there at 73,835. And, any closes below the lower second, that would be expansion to the downside and losing the kind of closing structure here around that monthly quarterly. So you don't really want to see any closes below that $59,000, but it's a big range. It can spike the lower seconds, it can spike the upper seconds, even wicking through without doing much. This is painting a big range, a big volatility range. After this is the result of this very large move up and the mean reversion back to support, or to test a prior area as support, as they were resistances. These monthly closes were resistances because those were highs that were put in along with these all-time highs, and these areas are now being built out as support. That's a positive thing for the bulls. The 4-day is another, and when does the 3-day close actually? 3 days is going to close with today's candle. So I do want to keep in mind that closes below the basis band at around $66,000 are going to give us the bias that it's going to keep testing this April of 21 $65,000 area to its current wick low around that $64,000, and it brings into play from a volatility standpoint that lower first there at 62,600, kind of splitting our 62 to $63,000 area on the daily that's over there in those candles that are showing up as wicks here on the 3-day chart. Let's go ahead and move on to the 4-day. 4-day is also a big range, and we do see that Bitcoin is currently trading below the basis, giving us the bias that it's going to test, 65 to its current lows at 64, and available moves down to $63,000, which is the top side of the prior uptrend. It was the first basically breakout for that higher low at $63,000 at the top side of those candles that did put in the low here. Anywhere below the lower first, that gives that low the ability to be ran from a volatility standpoint. Obviously, 61 to $62,000 below 63, down into that $60,000 even. Don't want to see closures below there. That would be expansion down into the monthly, quarterly, that wick low and possibly lower. And while I wouldn't be overall bearish on Bitcoin for the longer term, that would lead to likely an extended drawdown before things really get rolling again in the bull market. Here's the other thing that you got to pay attention to, and that's the 5-day. The 5-day did close below the basis band and run the lower first. You can see this is a big expansion to compression, and I want you to note the important levels here. Below $64,000, Bitcoin is more likely from the 5-day time frame perspective to come down and test somewhere around $61,000 to $62,000. This lower first first is at 64, lower second rather is at 61.5, kind of splitting the difference between that order block area, that daily low that was set at 62, and the big October monthly close there at $61,350 to $61,000 depending on your exchange. So 61.5 would be in play if we start seeing Bitcoin close below around 64. Obviously, wicks do matter in that case, and the lower term time frames do matter. Now, any closes back above the basis at around 66.5 from a volatility standpoint, you look to this big order block candle over here and some of the lows at around that, $67,000 to $68,000, and then that was one of the bigger areas on the daily as well. And we can just reference that, by the way. You can see that it was the bottom side of the close opens here and some order block candles, but let's just reference that again. That'd be right around the basis band on the daily. But the 5-day, basically $68,000 to $69,000 by the upper first, which is right there at the prior cycle all-time high. Above there, we're looking right back to around $61.5 to $62,000 by the upper second, and then anywhere above there, we're looking to the highs and higher, around 70 rather, 73,835, and then up to that 75. You can see this is a beautiful compression. It is going in a sideways range right now, very low volatility. Moves back to, when in compression, moves between the upper second and lower second are not out of the question. It's, the next big move or expansive move would be, above the upper second, it's really, blue skies. Below the lower second, it's expansion into support. And there's plenty of downside supports to pay attention to if that were the case, including the local supports here at the October and March monthly, and then that March monthly and quarterly there. The weekly, well, this is the basis band. Let's go ahead and not destroy this chart. This is the basis band on the weekly as it relates to our support and resistance. Where is the basis band? Right around 64,000, 64,200 in this case. We see the upper first right above the lower high here on the weekly that is confirmed, which is, leading us to this further downside testing. You can see that the next natural area to go test, obviously the close open right at that 61.5 or so, 61,350 right on that October of 2021 monthly. And you see the lower first is starting to skate into a very important area, and that would be the monthly quarterly there from March. It's currently at $58,000. If we do start to see closes on the weekly, whether that's on the daily time frame or on the weekly time frame especially, then we're looking for moves down into that lower first zone in terms of volatility. back above the upper first, we're looking for this to run its all-time high and higher up to around $75,000 to $78,000 by the upper second, and then possibly 78 to 80, somewhere around the upper third, and the mid to low 80s from there. You can see that we've got the upper second at 76,500. Where do we have the some of these medium-term time frames? They were all starting to squeeze in. Yeah, everything's starting to squeeze in around that $76,000. So 75 to 78 is a fair area to look at on any kind of breakout above the all-time high, at least initially, and then come back to it for that 78 to 80 in the mid to low 80s. As you can see, the upper third there at around $82,000. Now, if we go ahead and get rid of some of the support and resistance real quick here, we can get some areas of interest on the pullback for a fib, and we can just pull a regular fib. This is log scale because we are on log scale, and you should use log scale no matter what. Even when you go to lower term time frames, when you're using log scale instead of linear, even if it's on a linear chart, you're not going to find much difference on those lower term time frames. But in this case, you can see that Bitcoin lost the 618 on the weekly here, and then where'd it go? Right down to the 50% level. Wick through, you see that 62.5 is the 382. On any breakouts, you're looking to that 1272, somewhere around 80. So that would be above the all-time high. So 80 to mid to low 80s is by the upper third, by the 1414 up there, lining up pretty much perfectly as it stands right now. So the current range, is going to be something to pay attention to. Now, that's the overall range. If you want to just track the past uptrend for mean reversion, we just go ahead here to these highs. And in this case, you can see it's essentially the same. You're shaving off about $1,300 for the highs here, maybe a little bit more like $1,400, but not much different. Bitcoin was holding from the prior move up, and then the move back down. So you're looking for that mean reversion. 618 has been broken on the daily, more likely to run that 50%. It's kind of already ran that. That's around that 63,700. So those are some of the areas we've already talked about. The 382 is there at that $62,000. So as it stands right now, it's painting downside, but the potential above $65,000 is for a bounce. Realistically, what do you got to see? You got to see a low being set, and then you need the last spike high taken out. So the last lower high taken out to start changing the trend. If you want to mark up your charts very, very simply, this high gets taken out at 67, 274. This is now the criteria to get a trend break. Of course, that's that high over there. Anywhere above here, you could take the 67,322 wick high, to be fair, as an area of interest to the upside. Anywhere above here, we're looking for a trend break, and then at minimum equal lows or higher lows. So that is kind of all that's possible from right now. I mean, we would need to see Wednesday into Thursday to start looking for 3 candle or more lows in terms of a close. Right now, on a closing basis, you can also mark off around 66,630. If today's candle were to just head right up and close above there, that would set a technical closing low and, of course, solidify this swing low as well. So that's where I'd be looking for a bit of a trend break. We can even throw a swing chart on to show the visuals there for that. And then, either looking for higher lows or equal lows from there to start forming an uptrend again. And of course, that is, any closes below $64,000, and we're looking for that 63 and a half, and then below to just take it, $1,000 at a time, 61 to 62, or 62 to 63, so on and so forth from there. And keep an eye on that higher low. That's going to be the backbreaker for many in this market, I think. And if it gets ran, one of the things that I did talk about last week was, last week, it wasn't last week, it was yesterday, is the production costs. So Just understand where production cost is, and that it's very rare that Bitcoin runs below its production cost. And what is going on here? Oh yeah, I have to turn on the indicator. That would be helpful, huh? Bitcoin production cost, down at that $60,000 level. So just understand the context. I showed this yesterday for those of you that are watching this longer form video to get a little bit of a bias check maybe, or a bias confirmation. Understand that Bitcoin rarely trades below its production cost. It's very brief when it does so. And it's typically only around the bear market lows or the absolute bottoms. We did see that right around the one of the major low areas traded below but did not close below. Closes below, you're typically looking at the bear market bottom. We have one more that we can look at that we're not going to dive too deep into this, but just post halving is the other time frames that we look for to close in and around and possibly below production cost. And where are we at? We're just post halving. By the way, look at post halving, this sideways and this chop solidation or consolidation sideways. Not abnormal at all. Moves up even, and then moves right back down to retest, and then get on with the actual bull run. That is essentially what we are looking at right now. So don't get too concerned. I know that this has been a little bit more long form, but it's not anything uncharacteristic for Bitcoin right now. All right, let's finish up with Bitcoin here by looking at a few other things that I want to just keep an eye on. And that is, early indications are closes above 65 on the daily is going to be very, very good in terms of that structure and momentum to try and get to set a low and get a nice bounce, right? And then back above, 67, 272 to 300 or so. We're looking for Bitcoin to break that downtrend, right? Now, and possibly even set a low all in one go if it were to do that. Now, when looking at the 12-hour, I do want to pay attention to where things are. The 12-hour has just been a really nice markdown into support. We haven't seen really aggressive expansion. We did get expansion, but not super aggressive. It's been pretty tame, right into that $65,000 and then $64,000 area right over here. And for the actual 12-hour was a little bit higher because the daily closed right at 64, which is what was spiked. But the 12-hour closed a little bit higher, so it did dip into some of the liquidity within that area to find a little bit of support there around that $65,000. But we want to keep an eye on the potential. There's, I believe, no bullish divergence for this right now in trend. Let me double check that first before I speak on it. Maybe the equal low bullish divergence might populate. I do think it's just a slight bit lower here. Let's go ahead and see what that read is at 35.74, 35.93, yeah, 36. So no, there is no real in trend, meaning this downtrend. There is no real bullish divergence available to it right now. There is some, historical bullish divergence, which would be your hidden bull divs. I don't really think those are worth looking at right now. But pretty simply, what I'm looking for is some kind of a swing low to be set again. It did attempt one when it ran up and basically hit that 67,274 here, which was basically the overhead resistance between 67.2 to 3. We need to see a 12-hour close above 65,426. That would set a swing low, and it will call out on most indicators a closing low. Get back above the lower first here, which is at around that 65,660, and then start running that 67 to 67.2 to 3 again. Above there, obviously, would put it above the basis band right now, which is coming in below that lower high swing. So this would likely act as lower term time frame resistance, right around this low as well, between 66,800 and that 67.2 to 3. Above there, then we can start looking for a more significant trend break if it did start to trend break on the 12-hour. So again, need to see a low being set and a regain of this lower first to start even entertaining moves to that area. That's going to be around 65, 430 to 65, 660. Above there, we can start entertaining moves to $67,000. And then when we look at momentum here, I believe above 66, actually, you know what? Right where it could possibly set in and around where it could set a swing low, possibly a closing low, is that 65, 400 to 500 area. So above there, we would also see momentum turn back to the upside. Again, we need to see follow through close over close. That means that wherever this momentum pivot updates to, will be the next big area to pay attention to for the 12-hour. And then, of course, as that relates into the daily here, which on closes above $65,000, would start to change the picture a little bit. You can see that the 12-hour is actually a little bit more aggressive in terms of its pivot number to the upside than even the daily. So as long as Bitcoin's holding $65,000, good for probably a shorter term time frame bounce. We'll come back to it after it bounces and evaluate from there. Let's go ahead and take a look at ETH. We've got ETH is hanging out in the zone that we had previously spoken about to the downside here. So ETH losing that 35.20 or so on any loss of that area, where we were looking right to the next lower high. And that did get tagged twice. It got ran there at around that 33.50 zone. If ETH can start closing back above 35.20, though, I would be looking right back to this lower high as a possible candidate to get ran. That's right by the basis band at 36.50. If we do see closures above there, I would be looking at this as a nice trend break. We're probably looking for some higher low structure to occur, but I would give it some room between that 36.50 to around that 37.25 again. If it can get back above in this zone again, then we'd be looking for around 37, that 37.25 to 3,800, and then possibly even up to a nice run back to 3,900 to the overhead resistance there at just under 4K. I had mentioned when this was consolidating up here that what bulls want to see is this consolidation hold up around this area. We got that expansion down into retest some of the further downside structure from the prior move down. Testing the highs there and getting a nice bounce is okay and all, but we need to see a structure change. So you do want to see closes above 36.50 as it stands right now. And that would start on, the potential for that to be in play would be on any daily closes back above that 35.20, 35.30 area. Is it ready to turn yet? In fact, ETH has already turned on the daily, but it's not very strong looking just yet. 34.54, as long as it's closing above there, it is pressure to the upside. We also see that if it does set a low here around the 35.20 area, we would see another drive of hidden bullish divergence. Now, the prior drive was only good enough to pop it back up for that lower high. So just understand that that hidden bullish divergence isn't necessarily that powerful. So I wouldn't, put a lot of stock in it. But at minimum, I would look for a test somewhere in and around there, unless it just fails this 35.20 area. So closures above 35.20, good. If it does spike up intraday and close back below, probably running those lows again. Its current low side structure around the lower second, right into that 33.50 to the close open down here around that 32.50, 32.60 area. And lower from there, if that area breaks down, next lower high is going to be right here. It's kind of tight at that 32.20 to 31.30 area, but it's step it down $100 at a time basically from there into the overall support. Again, I've mentioned this a few times. If you've watched, ETH never ran its 2672, which is the red line, which is good. It was getting bought up prior to that at around that 2800 level. and that would be any moves back into this area just means longer form consolidation, and keep an eye on that red zone because that would be very, very bad for ETH. But other than that, I would be looking for more consolidation, and we'll see how things kind of end the week out as we come into the close of the week for ETH. Sol is the next one that we have been keeping track of. It has moved down and close opened right on our big zone. I'd mentioned, losing 160 was bad, and that if we saw 160 lost, we were looking down to that 150. Needed to hold up there. It tried, it failed. So the next big area we were looking for was down to like 135. Anywhere below there, we're looking, 130, 125 area down here, all the way down to that 112, this big, big support zone. Obviously, you don't want to see the lows lost at like 120, but got a big spike down. This is an area that you would want to see Sol hold up, recover above 150, take out this lower high at 151, 73, 152, and try to test up towards that basis and then higher low its way out of here. I would say that it preserves its opportunity to do so above about $135. Anywhere below there, we're looking for this to run down to these lows again, somewhere around 120 to 125. And the daily might be setting up for a potential bounce. There is, again, just like ETH, some hidden bullish divergence. 130, 130 is the momentum pivot. I would say you want to be even a little bit more aggressive with the closures on this. You want to see it holding above around 135. That would keep it above its lower second. It does look as though a bounce is in the cards. Again, anywhere below 152 doesn't do much. Still a downtrend. And preferably need to see that 160 close above again. I would keep in mind that like 141 is this low side structure right here. So I would be careful again on any kind of price action that lives below there. And then that 150. So I'd say 140 to 150 would be the overhead resistance to pay attention to. Splitting the difference there is the lower first, which is basically the downtrend support there now. Back above 150, and then you can start looking to that 152 for a possible downtrend break. I don't think that it would immediately leg itself up. I do think it would, hang around this zone and try to higher low its way out. Let's go ahead and look at CASP, which is the other main one that we've been looking at. And this is actually a really nice move back. I'm still bullish on this anywhere above 13 cents. So it came right back to 13 cents after running just under 20 cents there at 19.4 cents. So it ran our zone up here, our overhead resistance that we were looking for. That's this high structure over here. Big downtrend. This is the first big pullback after that downtrend to uptrend reversal. What you want to see here is closures above 14 cents that can start close back above 15 cents. That would start to paint the picture that things are going to go for 16 cents around the basis and then possibly back up to 17 cents around the upper first. And that would give the potential to run this zone between 17 and 19 cents again. Above there, I'm looking for 20 and then 20 to 25 on any breakouts. This is playing around its all-time high. So I'm not too concerned about it. This is not the best look on some of the longer terms, I don't think, though. Actually the weekly's fine. What's the weekly fine above? 12.3 cents. So no, actually this is fine. So above 13 cents is fine. 15.6 cents is going to be what will turn momentum back to the upside. Realistically, I would say this is probably front runnable on that. If you do see prices closing back above 15 cents even. And then we start looking for that pivot to really turn. That doesn't mean that this is going to elevator its way up, but that would at least give us the bias that back above 15, it's probably going to test around 16 and higher to that 17 cent zone. But looks pretty darn good right now for all things considered, with all these alts just absolutely taking a dump all over the floor here when Bitcoin moves down, even in the slightest. By the way, is because of Bitcoin dominance heading up And one of the things that you probably don't want to fade is an uptrending Bitcoin dominance chart. So, it's Bitcoin's time. When it moves up, it's going to take everything with it in terms of US dollars. Some will outperform it in terms of their BTC pairs, but don't be surprised when things just get absolutely destroyed on Bitcoin's even smaller moves relative to the downside. And I do want to call this out. This is probably pretty important to call out here. And man, they moved that edit button right there, and that's really annoying that they did that. Total market cap still isn't broken out, obviously, because we don't have a lot of alts making all-time highs. Total 2, which is getting rid of Bitcoin here, topped out around at 786 from the prior bear market cycle fib. It topped out at the 786. It's been trying to hold the 618. If it has the ability to dump out even further down to its 50% level here, which is about 854 billion. That wouldn't be a bad move. That would actually be a bullish move, but that would mean that a lot of alts are getting absolutely destroyed. And likely that would occur on Bitcoin's moves down to the bottom side of its current range if it does dump out any further. If it holds around the 618 though, that is where you want to see things come in around this 618 and then start to get above that 1.269 trillion to go run the prior structure highs over here. This has basically failed around this was the lower high that kicked off the bear market over here. Essentially, you had this lower high, but this was the big one on the monthly for total 2. If you were to look at the monthly chart, is right here where the 786 is. That is where total 2 topped out. So, as long as it's hanging, it's going to be fine, even if it comes down to that 50% level, which is not crazy at that 854 billion. Obviously, losing a trillion, shaving off another 150 to 200 billion would not be ideal for those of you that are in alts in any big way, holding bags. Great for shorts, by the way, great for short trades, but that would not be ideal. But while Bitcoin is kind of revving up and consolidating, you do want to see things eventually get moving. Same thing here, right? For total 3, this is excluding ETH, and you see that it didn't even make it to its 786 here, and it is currently hanging around on its 50% level, which is the monthly upper first standard deviation around 569 billion, and being trapped by the upper second. But the thing that you do have to understand is this was compression to expansion. Retests of upper firsts are fine. It can even safely come down. I would say, yeah, now it could safely come down and retest, somewhere around the 382. I wouldn't necessarily want to see it closing anywhere below this order block candle, and that's low sides coming in at 440 by the basis, and the high sides coming in at 534. That's 534 to 440 billion, 440 billion even. Don't want to see that. Yeah, so it's not anything too crazy. This is kind of normal stuff. Others is probably painting much the same picture. I think Others has actually gotten a nice pop, and that's this is everything that is outside of the top 10. Big old bearish divergence on the monthly there, but corrective, to be quite honest. And yeah, this actually almost ran its 888 up there. It's going to move in a little bit less technical way than some of the more established stuff, but it's still holding pretty technically sound right now. Round at 618. If it does start to close below there, could dump out to its 50% level at about 185 to 200 billion. Currently at around 227 to 230. If it does start trading back above the 618 at 233, then obviously upper second by the 786 is going to be the natural target to around 325. And on any breakouts, then we're going to see this stuff really get rolling. We're likely seeing Bitcoin move on. Probably not even alt season yet. Once this stuff gets rolling, we'll probably see this enter its all-time high breakout zones after Bitcoin really gets rolling to the upside, and then come back to it later. Let's get to the 15-minute on Bitcoin, just see what's happening. Yeah, nice little deviation in the April, trying to hold it as support. If it fails, well, we've got a compression. This would be very telling if it expands back to the lows versus expanding to the upside to test some of the structure at 65, 800 to 66K over here, so on and so forth. All right, last thing I'm going to look at is just the top dog in runes. Now, I know you're probably like, hey, I don't like dog, and dog's not my coin. I'm invested in Sakayo hamster or Bank of Nakamoto dollar, which has like a ton of supply overhang. Be careful. You should not be buying into Epic, by the way. No, it is not a scam. And I've seen a lot of people call it a scam. It's not a scam. Everyone knew that was minting this. There was a 950 million coin overhang. That's an airdrop that's coming up from the team over there that created blobs, Neuro and Eloc and team. And I believe they're also going to airdrop to other communities. That's not anything they've confirmed, just something that I have been seeing around. But dog is the big player in this market right now. It's got the biggest market cap. It's moving the cleanest. And on the daily here, it looks fine. It's basically retesting and continuing to retest this zone between 0.005 cents and that 0.057 cents. If it does lose it, then we're looking to this shorter term consolidation just below 0.005 cents, somewhere where the daily lower third's coming in at around that 0.046 to 0.044. If it starts to lose that, then it's headed down to test this low side structure at 0.03738 region to 0.004, I would say, before even looking at that 0.0369, which is nice. Now, any recoveries back above around this 0.066, then we are looking back to the basis here, and that's now coming in right at that 0.074. Above there, we're looking back to the 0.08, and then above to that 0.085, and then above there up to the 0.09, almost a penny area. This is a good candidate for a double bottom, but if this thing loses 0.05 cents, then it's dumping out at minimum to that. 0.057 on a close. You could give it a little room to hang on to 0.056, but I'd be looking for 0.05. Anywhere below there, I'm looking for it to dump out below that 0.005 cents. So basically, below 0.057, I'm looking for a half a penny. Is it getting ready to bounce? This is too short of a chart to really tell. 12-hour is down below 0.072. So again, not great on some of these longer terms. 4-hour might save things above 0.0611. And currently it is trading above there. I'd be careful. This is still an expansion, and this was expansion into support, but this expansion is still in progress. So again, got to see closes back above that 0.066 region. Any price action above, where it is now by the lower first, where it's kind of peaking out right now to try and set this low. That is 0.062. Then maybe we can start looking at that 0.06566 area and for a potential reclaim, and at minimum for a test. That is going to do it for today. We are butting up against our hour-long timer here, so I will let you all go. You have a wonderful rest of your week. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe, and I'll be coming at you again tomorrow with a short form video, hopefully about 10 to 15 minutes. All right, take care. Landy out.